Go.
What is up, everybody? Welcome back to the Russel Journal. I am Russell, and this is my journal entry for November 28th. It is Monday, November 28th. As you can see, I made it back to Seattle. I'm back in my apartment, and we come into today in a massive sea of red. Okay. A lot of stuff here to kind of unpack. Overall, the thing that's going on right now is civil unrest in China. This is they're rioting essentially over the zero COVID policy. There was a couple of other things. I think the zero COVID policy is the big thing. And what they're asking for, what the rioters want, is President Xi to get off, to resign. No doubt, the zero COVID zero policy has been an epic failure. It has not worked. It's not really good. So that is okay. Sorry about that. Anyway, it's been a huge epic failure. China's denial of COVID and they're not willing to accept it is pretty bad. Really fairly well shocked. None of us are shocked. I don't think anybody who's been watching this is shocked that this has not worked. Going forward, I don't know. Okay. Little stop right here. Sponsorship. We have gotten a sponsor for the show. We are brought to you by the Nevada Chamber Orchestra, just so you all know. I'll talk a little more about them, but they do have a show coming up on the 4th. You can check out the Nevada Chamber Orchestra's website. We'll put a link in the description below. So if you are in Las Vegas, on December 4th, they do have a show coming up, and we'll talk more about that later. But they are sponsoring us, so I thought I'd throw a shout out to them. Thank you for their sponsorship, and you guys should go check them out. Somebody who was a musician, somewhat semi-professionally, I think it's good to anytime you can sponsor, especially the classical arts. I think that is very much so a good thing to do. All right. Getting back to stock market this week, big week. Friday, non-farm payrolls, PCE inflation data. These two things will tell us everything we need to know about the Fed and what the Fed is going to do. Sort of. Here's what I think. Non-farm payrolls going to be up or going to be down. Okay. We saw a little bit of rise in unemployment over the month of November. So over non-farm payrolls are going to have to be a little bit down. Sorry, I went up. I mean down. Need to be there. They got to be down. Okay. Not a whole ton though, right? We went from 225,000 to 250,000 new claims. All we've really done is gone from 1.39 million to 1.5 million continuing claims. It's not up a huge bunch, right? We're not seeing massive things. So going to be more in the favor towards the Fed pivot than not. We already kind of can know this. You can just go back and actually look at the unemployment numbers week by week from the last year, from the last month, and you'll have some idea as to what they're doing. Right. PCE, pretty close to when we just got PCE data. So you're probably going to see a slight change, not a big change. And this is something I've been talking about with people a lot. Okay. And we're going to put all this together, China and these reports coming out in the coming, in this week. Okay. We have those two reports. If we have those two reports, we don't have to worry so much about CPI, which comes next week. But there will be some concern over CPI. And the week after that, we get FOMC. So a lot of stuff happening in December as far as what they're looking for as far as a Fed pivot goes. This whole thing is a bit ridiculous, to be honest with you. It's all a bit crazy, if you will. And we'll get into that. Okay. Anyway, So you got yourself the Fed, or you got your PCE, CPI, or no, PCE and non-farm payroll Friday. It's going to be a big deal. Okay. Again, something I talked about last week was the idea that ahead of those reports that the stock market should pull back, and ta-da. Okay. Second big thing that, and we'll go over this when we go into the charts, and I have a new method for charting. So we're going to do the charts a little bit differently today. Give it a shot, see how it goes. Maybe it blows up in our face, maybe it doesn't. All right. So what we have to talk about, though, is Fed pivot. Okay. What is a Fed pivot? Well, ideally, in the world where stock bulls, people in the stock market are bullish, you need the Fed to stop raising interest rates and, in fact, start lowering them. That's the pivot. Until that happens, it's not a pivot. And this whole rally up that has been very epic and very nice, and it's basically hit its marks, and we'll go in and look at that when we look at the charts. It's good. But the idea that you're going to go back into a bull market and that the S&P is going to go to all-time highs and da-da-da-da-da-da-da, Tom Lee is crazy. And to be honest with you, one of the other things the guys I think is nuts, and I respect him a lot, and he, in any economic conversation, he's going to whoop my ass, Steve Van Meter. The guy understands economics like he's decades ahead of me. Okay. So I disagree. I don't see how that's possible, but you should listen to Steve. He is a very guy. He has called so much of all of the steps of this. The timing of it, not exactly great, but my timing hasn't been great either. Anyway, so that all sort of being said, you've got yourself today. They're uncertain as to what's happening with China. The problem here is this all should have been, civil unrest in China should have been bullish. The idea that President Xi would be taken out of power, that COVID-0 would end, and that China would be opening up very soon should be pretty bullish. However, it's bearish. So I think if the market mulls this over and thinks about it, they'll see it as bullish. And they'll see it as bullish in two ways. Okay. One, there's two sides of this that can be bullish. One, the rioters get what they want. Xi steps down, COVID-0 goes away, and China opens up. Supply chain constraints fixed, right? Starting to be fixed. Okay, possible. Second thing, OPEC has cut oil production. So if China opens up, there's not enough oil for, the whole world plus China. All right, oil's going to go to the moon. This is not bullish for stocks per se, but it is bullish for the indexes, okay? Because there are energy sectors in this is bullish for energy sectors. It means the cost of oil is going to go up. Okay, so you can have those energy sectors lifting this market if China opens up. That is a possibility. Now, here's what I think. I don't think Xi's going anywhere. Unless they kill him, I don't think he's going anywhere. And he's done some pretty scummy things, but he's not exactly Saddam Hussein. So I don't know that they're going to string him up in the streets. Pardon me. I got a thing from my girlfriend's kids. So anyway, I got to not have snot all over the screen. All right. So that all being said, I don't think he's really going anywhere. I don't think the Communist Party is going to take this lying down. And to be honest with you, long term, and this is maybe why it is bearish, the market is because it could be that they're going to lock it down even tighter. So that's where I'm at. I don't think Xi's stepping down. I don't think he's going anywhere. Anyway, that's my 2 cents on the matter. Let's go ahead and rock over to the charts. All right, you're looking at SPY, baby. All right, we're gonna do this way. All right, you can see we have ourselves a pattern of higher highs and higher lows. Our trend is still up. All right, so what does that tell us? Tell us somebody should be buying the breaks. Why is this doing that? All right. This is not how that's. Oh, I've got. Is that the B button? I hit the wrong button. All right. You see our bias. We are up. This line here is the 18-day moving average. Okay. Our bias is up. We should be focusing on long positions, if any at all. Right now, where's the resistance? Resistance right up here. This 402 area, the 200-day moving average is this red line right across here. That has been the resistance. And if you go see the Bollinger Band, the combination Bollinger Band 200-day has been the resistance. Okay. So what is going to happen here? Well, now what we look at next is our momentum. Down here, you are above this spot right here. That means you have this bullish embedded reading on the slow stochastic. Until this comes over under here, the bulls will be trying to buy the breaks. So you're trying to get long with this above the 80 line right here. And it's been pretty resilient through all of this. It lost it. It has sort of tried not to embed, but with today, unless we wake up in the morning and that number is down here, you'll still have a bullish embedded reading. You have a lot of guys. Watched Steve Van Meter's show yesterday. He talked about the different companies that are trying to, or the different financial institutions that are starting to buy this market. They think that you're getting near the end of tightening, so they will be looking to buy. It doesn't mean the market will go higher immediately, but who knows? Also, the question getting into December is always the question of the Santa Claus rally. And I imagine you'll get one. I imagine you'll get one going into the Q4. And I think what you'll get it for is, again, you have to remember, think about all the different players within the market, okay? The different guys who perform within this market and there are guys who are basically waiting to find out if companies are going to be releasing more dividends. These guys live solely on dividends, and there's a big bunch of them, very wealthy guys. And really what they care about is, if I put in $100 if I buy $100 a share, right? How long do I have to hold? How many dividends do I have to get before I pay back the $100 I invested? And what they're really doing is buying the dividend. Okay. Now, some of them are reinvesting that dividend, other things. A lot of them are basically living on those dividends. So when it comes down to Q4 earnings season, which starts kind of in middle of January, you're going to have some run into that, because they want those dividends. You're going to have some buyers that want that. That's the only thing that's going to offset any losses, things of that nature. Other stuff that you will have happening through this period is you will have a certain amount of rebalancing. You look at the move in the Dow, that is a typically cyclical trade. It is something that usually happens, although not this time of year. This time of year, you tend to see more retail tech sort of things going in through January, and then you get the rotation into sort of out. Things like energy, right, or utilities, right? You don't use them as much in the summer, so somewhere in the next 3 months, they rotate out of those and into tech and other things like that. Ahead of the summertime trade, and then in somewhere in May, they start rotating out of that and back into the Dow. However, you really see this stuff is happening now which tells you they are worried about the recession. They want to be as safe as they can for the recession. So, as far as things go, if I were okay, so here I don't have it up, but you did stop on the 13-day moving average up here. I would look for a bounce tomorrow, and I would say you probably got a pretty strong chance of a bounce coming in this 18-day moving average. I'm going to expect this up here. I don't have the line set up, but this up here is sort of breakout formation. You can see you've got this resistance through here with that, right? But you can draw these things here keep pushing it up, right? And what you'll typically see is a break. Normally what people think you see is this push up into this wedge against there, and then it pops straight up. And in a momentum trader's like wet dream, that's what happens, right? You come in, you catch it right here at resistance, and you ride the wave up. That's what you hope. What typically happens in indexes is if you go from the first peak all the way across the tops of these, you'll get a pullback into that, and then it'll hook and go up. And the reason it'll do that is because what they'll do is they'll be shaking out stop losses. They'll be shaking out the weak hands, and really trying to push max pain to anybody who got in this probably before or after this point right here. Anybody who came in here, they're not going to just let you hang out. Anybody came in probably right in here, they're probably going to punish you a little bit. Good news is, even if you also look at that, and I don't have a line on it, but if you did draw a line on that, right, across these tops, pull back to here. If we come back here, that fills your gap, right? So it's not over till it's over. We don't know. The trend is your friend until the end. Get below this point here, though. You'll see a lot of trend guys end it. A lot of guys who are trend traders, you'll see them stop out below this point. That's a big deal. So again, we're brought to you by the Nevada Chamber Orchestra. Give me 1 second. I'm going to pull this up because I want to. So Sunday, December 4th, 2022, you can catch the Nevada Chamber Orchestra at the Summerlin Library. You can Google Nevada Chamber Orchestra, their website, nvchamberorchestra.com. You can find that information there. I will post the link to it in the description of this video. If you're interested in going to check them out, would love to thank these guys for sponsoring our video. I hope you guys go out there and check them out. And till tomorrow, let's see, what do we do? Oh, that's right. Russel Journal, written, edited, hosted by me, Russell Lutz. We're produced by Social Media Shows. Our executive producer is Maria Pereza. If you are interested in learning how to do a show like this, you should call Social Media Shows. They have really great deals. You can have really great budgets. And for any budget, they can help you out. Really good team over there. So anyway, until tomorrow then, after all that being said and done, I guess pretend I said some sort of catchphrase.